Afternoon, June 21st, 1:55 UK time, and let's see what's driving the markets. And it should be a wild, volatile week after last week's escapades, right? So let's have a look quickly. I literally haven't scanned what's happening, so just open up the laptop. Dow futures jumps 200 points as stocks rebound from the averages worst week since October. Wow, it's been that long since we had a last correction, eh? Okay. Dow rose 200 points. S&P 500 futures gained 0.4, while Nasdaq 100 futures added 0.3%. The overnight action was volatile, with Dow futures dropping about 200 points earlier. Wow, so that's a 400-point swing right there. Broad group of stocks were higher in pre-market trading. Commodity stocks that were hit hard last week were rebounding, including Exxon, Chevron, up about 1% apiece. Reopening plays, here we go. Yeah, Royal Caribbean. So I believe LA, California is open. New York is open as well. So things are looking up in that respect. So expect some reallocation of capital, some from the stay-at-home, work-from-home plays into kind of the old school oil and gas, tourism, physical kind of stores, right? Maybe people don't want to go do the Amazon Prime, but maybe they want to go to a shopping mall instead, right? If it's been over a year for them, I'm sure they will be aping to get back and get some retail therapy. It's not just going out and shopping for stuff, right? It's more about the experience for, I guess, for women, right? Men still like to order online, or I do anyway. Okay. US stocks fell last week as investors digested new economic projections from the Federal Reserve and worried rate hikes could come sooner than expected. I'm expecting like 2023. It's going to be a couple of years, right? Oh, here we go. The Fed on Wednesday raised its inflation expectations. That should be positive, no? For stocks that are securities which are tied to inflation, no? And forecast rate hikes in 2023. That's what kind of maybe spooked people. But that's a couple of years away. And will they raise rates at a rapid rate here, a 0.25 there? You know, it's going to be slow going because they can't really get it off that floor, or 0.25%, right? That quickly without causing some further harm. Anyway, St. Louis Fed President Jim Bullard said Friday, this is 2 days later, on CNBC's Squawk Box, that it was natural for the central bank to tilt and move more hawkish. Hawkish means kind of a tightening of the money supply, right, through short-term rates. And then dovish means, bird in the sky, kind of, fluttering away, easy money, right, lower rates. So Bullard kind of speaks with the market, maybe. Yeah, here we go. He said 2022. So maybe he's the resident hawk amongst the board members, right? Anything else? Bitcoin, we'll come on to that in a minute. The Treasury yield curve flattened last week, hitting banks. So this is like the graph of the interest rates that go from short term all the way up to, I believe, the 30-year, right? It should be a natural curving up with rates down here on the short end and higher rates up here on the long end, right? That's a natural, healthy market. The yields of shorter term treasuries, like the 2-year note, rose, reflecting expectations of the Fed raising rates. And these guys have highlighted in, I think, on Arthur Hayes' blog, are always early with the market is always early, and sometimes it's early by years, right? So they're always kind of playing the fear trade. Because why not? Extra volatility means extra trading profits potentially for these guys who do the, basically, what is it, quant trading, right? Longer term yields like the 10-year note retreated, a sign of less optimism toward economic growth. Investors await public appearances from Fed members on Monday, that is today. Okay. What time? 9 a.m. So right now, I believe, yeah. New York Fed President John Williams is expected to deliver remarks at a mid-sized bank coalition of America Monday afternoon. Okay. So there'll be meeting during the morning and speaking in the afternoon. So it could be a volatile day for you day traders. And volatility is action. Action means trades to be placed, right? But I don't trade anymore. It's just those days are well beyond me. American Airlines cancels hundreds of flights due to staffing crunch, maintenance issues. Oof. You want to be booking a flight anytime soon with no mechanics on the ground? Yeah, maybe wait a few months. So maybe next year. Amazon Prime deal. Yeah, like I mentioned earlier, maybe people are just gonna skip Amazon Prime and go out regular shopping in the malls and stuff, right? Beware of inflation headwinds. Economist Mark Zandi predicts 10% to 20% market correction. Inflation is normally positive for assets. So again, CNBC kind of throwing you off the scent. Deflation means that's what pops asset bubbles, right? Inflation is good. Bernstein says wait for the price to buy Apple shares. Yeah, boring. People buying Apple shares now. If Buffett buys Apple shares, it's time to get out. Supply chain snafus could affect what happens. Again, pumping Amazon, obviously. CNBC getting kickbacks probably. Boom. Anything else? Biden's top tax rate on capital gains. Oh, this is interesting. Very interesting. Again, this is not helping. Again, this would not help. President Joe Biden proposed a top federal tax rate of 39.6, flipping heck, on long-term capital gains and qualified dividends. Wowzers. Watch out, you Robin Hood traders, eh? You made a little bit of money and now you're getting hammered. That's if it passes, which is, depending on the number of senators left and right, it's gonna take that's unlikely to get past. So he's doing a Trump play, isn't it? He's trying to do the art of the deal and shoot for something high and actually trying to get maybe 25% or something. The wealthiest people would pay almost 49%. Flipping heck. Only Ireland has a higher top rate, 51% on dividends. Wow, amazing. There are many caveats, of course. Of course, there are many caveats, I'm assuming, in the small print. Perhaps most important, the highest US rate applies to relatively few people, the top 0.3%. Not even the top 1%, top 0.3%. In other countries, the top rate applies across a broader pool of taxpayers. So, going after the Bezoses, yeah, they don't pay tax, right? They don't really show earnings or keep their profits offshore, right? Anything else? It's interesting. Top tax rates on long-term capital gains for individuals in developed countries. US proposal 48.6. Wow. US currently is 29.2. That's higher than I thought it would be. Top capital gains tax. Wow. Where is the lowest? Wow, look at all these countries. Czech Republic, 0. Belgium, New Zealand, Slovakia, Eastern Europe's looking tasty, isn't it? Switzerland, 0, obviously. Banking, safe haven. Respectful capital historically. Not too sure anymore, but look, seems to be still true. United Kingdom, 20%. United Kingdom, 20%. Not too bad against these countries up here. France 34, Chile 40, and US proposal, that's never going to be passing it. But maybe he's trying to get it, what, mid-30s? Mid-30s, that's a big jump. Big jump. Okay. Anything else going on CNBC? Stocks making the biggest moves in the pre-market. Ooh, interesting. MicroStrategy, I'm sure, is taking a dump. Coinbase as well. Let's have a quick look. I have them on my TradingView watch list as well, so maybe I'll take a look. MicroStrategy down 8.7% in pre-market trading amid the slide in Bitcoin prices. Yeah, it's basically like a Bitcoin ETF now, isn't it? Coinbase only slid 3%. Yeah. Okay, more volatility, more trading, more fees. Maybe something like that. Okay. GlaxoSmithKline cut its dividend. Tesla, let's see what Tesla's saying. Former Tesla executive Jerome Julian sold about $274 million in Tesla shares since June 10th. Wow. Top holder, whale, as crypto people will call it, right? According to a SEC commission filing. Julian left Tesla earlier this month after 11 years. Oh, there you go. Most recently running the company's Tesla's heavy trucking unit. Okay. Again, this is interesting about the reopen. American Airlines will cut planned flights for the first half of July by about 950 flights, or 1%. That's not that much, is it? To relieve strains on its operations as it deals with a sharp rebound. That's good. Sharp rebound in travel demand. Boston Beer, always a buy. Right? The harder the times, the more beer that gets drunk, right? Guggenheim repeated its buy recommendation on the Sam Adams beer brewer and elevated it to a top pick status. I should have bought this way back. Yeah, before the microbrew revolution really caught hold. Guggenheim notes a depressed valuation, easier retail comps beginning in June, and underappreciated growth prospects for the truly hard seltzer brand. If that's part of Boston Beer, that's a good move, isn't it? Let's have a quick look. I wonder if they have the chart. $970 on Boston Beer. Okay, let's click on all. Yeah, wow. What a performer. Yeah, look at this. Yeah, I should have bought back here when I was drinking their beer. $25 all the way up to what? $1,200. Wowzers. A few six packs in this stock would have done well, isn't it? Wowzers. Okay. I think I'm done with CNBC. Okay. Let's take a quick look at Zero Hedge and share screen. There we go. Yes. Okay. First article. Last week's volatility is a sign that Fed tightening could be over before it even began. Interesting. Article by Tyler Durden. Oh no, and Michael Every. Okay, so he must be getting the quotes from Michael Every or Rabobank, which I believe is a Dutch bank, I think. Policy errors and zeitgeist. Last week, or at least post the Fed meeting, was wild. Yeah, 2-year treasuries. Yep. Even given the possibility the US long end reflects the Fed buying more treasuries than the Treasury is currently issuing. Well, the overall impression is still of the market screaming policy error at the Fed. And why not? Doing nothing for 2.5 years as asset bubbles roar, and then hiking rates into what would logically be far closer to the end than the beginning of a recovery cycle is the embodiment of monetary policy error. They always do that, right? They allow the bubbles to grow and then they kind of rug pull it at the end. They've always done it historically, right? Will the Fed respond? Perhaps not short term. So more of this market action could be yet be seen. Indeed, it will likely take equities tumbling to get the Fed's full attention. But even so, last week's volatility could potentially be a sign that US policy tightening is over, even before it began, possibly. Yeah, unless we get a shift of fiscal policy and supply chains. US academic Brett Weinstein is facing a YouTube ban for daring to host experts discussing ivermectin and mRNA vaccine safety. Oh, wow. Obviously, YouTube knows more about the science of mRNA than the man who actually invented it. Oh, interesting. Might have to check that out. However, restoring to free speech and free thought. Weinstein is again at the heart ahead of the zeitgeist. I recall watching his experience at Evergreen College in 2017 and saying to anyone who would listen that this issue would go national if no action was taken. It certainly did. It wasn't, and it did. And almost everything, including central banking, has changed. Moreover, last year, Weinstein was the only academic voice saying evidence for COVID lab leak theory could not be ignored. And look where the US discussion is right now, a year later, right? National Security Advisor Sullivan stated on TV on Sunday, either China will allow, in a responsible way, investigators in to do the real work of figuring out where this came from, or they will face isolation in the international community. Yeah, wait. Would China ever accede to this demand, considering a tweet from journalist Zheng Wei 75 from the South China Morning Post? I find more Chinese officials are no longer keen to talk. One told me there is no use explaining as the world is forever biased. Those that hate us will never change. Why waste time? We just shut up and do our work. Days for our revenge will come. Wowzers. Explosive stuff from a Chinese official, a rich Chinese official, eh? But relying on the South China Morning Post journalist to be honest about this tweet. But otherwise, we won't really kind of give an accurate voice. But they are not too keen to talk. We kind of know that. Also unlikely to help US-China relations. Symbolically, is news that Hong Kong media group Apple Daily, owned by gel tycoon Jimmy Lai, is reported as likely to go under within days. Oh, wow. Yeah, it's more geopolitical stuff. Let's try and get some market actual news, eh? PPT assemble. Biden summons Powell, Yellen, Gensler after market rout. Well, did he really get to talk to him? I thought he was busy elsewhere. But did President Joe Biden just call an emergency meeting of the PPT? This is Monday morning article a few hours ago. Bloomberg reported Monday morning that Treasury Secretary Janet Yellen and a cadre of senior financial regulators have been summoned to a meeting with President Biden at the White House following last week's sell-off. Okay. Attendees include Gary Gensler, chair of the US SEC, Dave Uail, acting director of the Consumer Financial Protection Bureau, Helena McWilliams, chairman of the FDIC, and Michael Hasu, acting comptroller of the currency. Wow. The meeting set for Tuesday, has been called to discuss the state of the country's financial system and institutions. It's a little bit scared, isn't he? Including discussions of climate risk and financial inclusion. Wow. Now that the FOMC has signaled that the tapering talk has finally begun via the latest hawkish tilt in its dot plot, released after the close of last week's two-day policy meeting, it's clear that America's economic policymakers are growing increasingly nervous about market stability. Built on a house of cards, is it? Given last week's reaction to the Fed, as Lance Roberts pointed out the implications of tapering are clear. It's positive for rates and negative for equities. This is March. This is June. 2 rate hikes. Let's have a quick look. When? 2 rate hikes when? 2023. So, you're not too sure how to read this actually, but I guess this is like number of analysts. So, number of analysts 5 picking 0. Maybe that's how it's worked, right? Interesting. Yeah. Okay. So definitely nothing 2021 or 2022, but possibly 2023 seems to be the general consensus. So 2 rate hikes of 0.25% will put US at 0.75, right? If our instincts are correct, this will mark the first meeting of the PPC since a call to discuss, quote, air quote, market conditions that held last March as equity markets were in the middle of a brutal, if short-lived, bear market. Powell is also expected to testify before Congress tomorrow in his latest testimony on the economy as required by the COVID stimulus. Excuse me, as required by the COVID stimulus. Okay, so yeah, it's going to be an interesting week this week. Okay. Forex Factory, back to zero hedge. I don't think there's anything going on in Forex Factory. I think Lagarde is speaking. Elizabeth Warren supports central bank cryptos. Should you be worried? Yeah, maybe. Probably. The rise of private cryptocurrencies motivate the Fed to start considering a digital dollar to be used alongside a traditional paper currency. I mean, why not? You got the paper layer, the coins and the notes. You got your digital deposits, right? It's like there's various layers of US dollars, right? Not just what you hold in your wallet, your leather wallet. So why not have a digital wallet as well? So yeah, increase the supply. Why not? The trouble is if they introduce a digital dollar whilst eliminating paper currency. Yeah, but here they say alongside the traditional paper currency. But it's being phased out, right? Paper currency is being phased out. Try go to a pub in England and try and pay in cash, and you'll get weird looks. Yep, you have to pay basically with your card, even order through your phone and stuff. It's getting more high tech, right? All the payment rails, interactions with people are getting lessened and lessened. You can't go up to the bar and order a pint. You kind of have to just order through a kind of a server coming to your table, wearing a mask and a shield. Yeah. So, remember that sitcom, Cheers? Where everyone knows your name? Yeah, no one knows your name anymore. Yeah. Okay. The idea of creating a fully digital version of a US dollar, which was unthinkable just a few years ago, has gained bipartisan interest. Okay. The United States should not implement a central bank digital currency simply because we can or because others are doing so. The American Bankers Association says to lawmakers this week, the benefits are theoretical, difficult to measure, and maybe elusive, while the negative consequences could be severe. The group wrote, the explosive rise of private cryptocurrencies in recent years motivated the Fed to start considering digital dollar to be used alongside the traditional paper currency. The biggest driver of concern was a Facebook-led effort called Libra, which I think rebranded to Diem. And they were trying to build a global payments network using crypto technology. Though that effort is now much narrower. Yes, remember the hearings with Zuckerberg. He got a grilling, didn't he? It demonstrated. Imagine that, though. I think Facebook has 2 billion users around the world. they could have been the most powerful social network ever if they had a financial network tied to that, right? As well, bigger than all nations, right? China's 1.4 billion, US is 350 million, I believe. Europe is 500 million. Yeah, look at that. Facebook nation. But I think there's a real lack of, engagement on Facebook these days. So I don't know. So they need to do something, right? Yeah, central banks around the world have begun exploring the idea of issuing their own digital currencies. Of course, yep. Let's have a little. Let's see what Tyler's actually saying. Remake the dollar? No, this does not in any way remake the dollar. The dollar is still a dollar. It still floats. It still is not backed by gold. The dollar itself will not change in any fundamental way. Winners and losers. Guida describes banks as the big losers. Although the American bankers, I mean, if you got a digital dollar in a digital wallet on your phone, do you need a bank? No, right? Although the American Bankers Association strongly objects, it is not at all clear that banks will be big losers, or they would lose interest on excess reserves, or if you prefer, interest on reserves. The two are identical because the Fed Board of Governors reduced reserve requirements ratios on net transaction accounts to 0%. Effective March 26, 2020. Yeah, I thought that was actually deployed. So yeah, here we go. Confirmation for me. 0% reserve requirements. So they went from fractional reserve, which I believe was 10%. I believe even that I think seems kind of high. So it's definitely been chipped away at over the years and decades. This action eliminated reserve requirements for all depository institutions, finally confirming my 2005 statements. Banks do not lend from reserves, and there are no reserves anyway. Boom. Again, this line deserves repeating. Banks do not lend from reserves, so what you deposit in your checking and savings accounts, they do not actually lend from that pool of money. And there are no real reserves anyway. This was Tyler back in 2005. We are at that moment in 2021. Okay, so this is Elizabeth Warren. Other senators highlight the potential for central bank digital wallets to be used to deliver government aid more directly to people who don't have bank accounts. Digital dollar could also be designed to have more high-tech benefits, or some cryptocurrencies like facilitating, quote, smart contracts where transaction is completed once certain conditions are met. My biggest, I think, one of the biggest benefits of smart contracts, I believe, that's going to attack and disrupt is the insurance industry. If you have insurance contracts that are smart, that pay out automatically when a condition is hit, that could change the insurance industry majorly. There's no actuaries and big buildings, offices, and insurance agents. So smart contracts for insurance, I think that is the huge disruption that could be on our way in the next decade or two, right? It's major. Okay, wealth redistribution. People who don't have bank accounts, but will they all have a digital wallet? Will they understand how to use it? The poor to lower working class, right? So it has to be easy. This is why actually Facebook's Libra idea was actually kind of decent. That's why it got quashed so aggressively. I think the day of they announced it, you had senators coming out, of the woodwork and bashing at the project, right? This has little to do with the dollar per se, but it could make could make tax refunds and congressional stimulus packages immediate rather than by check. Yeah, that's so retarded, sending paper checks out. I think a lot of those stimulus checks were fraudulently claimed, and quite a few went missing, right? It's easy to see why Warren supports this, and Andrew Yang and all the free money advocates will be on board as well. If bank accounts can go away, poof, we can tax the wealthy, take money out of their accounts, and immediately redistribute the funds as the progressives see fit. In China, if you jaywalk and cross the street when it's a red light, by the time you reach the other side of the street, not only have you been fined, the fine has been taken from your digital wallet. That's how advanced the tech is in China. So they can easily import that software to your phone, to United States, to UK and Europe quite easily, right? Yep, it's on its way. Okay, kind of getting bored of all this. Maybe that's the last paragraph. Reason to be frightened. There are all kinds of reasons to be frightened about what is clearly going to happen, but why is it going to happen? Because China is going to do it, and the ECB will follow next if the US doesn't. Once in place, who knows what Congress or the Fed will concoct? I don't, and no one else does either. That's what's scary. Got some BTC, LTC, ETH, crypto, right? So there is an important role to be played by public open blockchains, right? Okay. Let's just talking about Bitcoin. Let's read this. Bitcoin, Ether, and most other crypto tokens tumbled to their lowest levels in more than a week Monday morning as more FUD out of China appeared to rattle traders. To wit, Bitcoin, the biggest crypto, touched its lowest level in more than 2 weeks. Bloomberg reported that authorities in the Chinese city of Yan, I never heard most of these Chinese cities that they kind of mentioned, but okay, Chinese city of Yan has promised to root out all Bitcoin and Ether mining operations in the area. Yes, yeah, China is going green. ESG, environmental sustainability, and green tech is coming China's way, and probably the Western countries in due time. Known for its cheap hydroelectric power in the coming months, Bloomberg cited a person with knowledge of the situation as its source. Okay. A Chinese city with abundant hydropower is stepping up action to rein in cryptocurrency mining, reviving concern that China is taking a harder stance on the industry. Yeah, they're going full force on this now. It's not FUD actually. A Yan government official told at least one Bitcoin miner that the city has promised to root out all Bitcoin and Ether mining operations within a year, said a person with knowledge of the situation. The curve appears to be widening across the province as power companies owned by the central provincial governments in Sichuan must immediately stop supplying electricity to crypto mining projects. According to a notice issued by the province Economic Planning Agency and Energy Administration, the State Grid power company has reported 26 suspected crypto mining projects to the government. Wow, getting snitched on by the electric company. It's added that city level governments will, because they got the data, they can see where the power is being used and can pinpoint it, right? It added that city level governments have been asked to start checks in the area and shut down all such projects that are found. Later in the morning, Bloomberg cited their statement, the PBOC, China's central bank, which formally requested a meeting with Alipay. Yeah, why allow Bitcoin to be mined when you can use Alipay, right? And several local banks were over providing services to virtual currency trading. Oh, well. The banks included ICBC, okay, or a bunch of other Chinese banks. Yeah. So the services to the exchanges are being cut for the Chinese people. PBOC also required banks and payment institutions to step up monitoring and screening of accounts related to virtual currency exchanges and dealers. In a hint of what might be to come, the Ag Bank, or China known better as Ag Bank, like said on Monday that it planned to clamp down on cryptocurrency trading and mining activities under guidance from the PBOC. Yeah, if you're the mafia, you don't want any competition, do you? You want it all. The firm said it will freeze any crypto-linked accounts as it finds them. Wow. Okay. As I expect, the global buy everything unwind continues this week. Bitcoin will fill those chill wins, says Jeffrey Haley, senior market analyst at Oanda Asia Pacific. So this guy is based out in Asia, so he's definitely feeling all the heat. Fears about a crackdown on crypto mining operations in China have been festering for weeks now, thanks to a series of reports in the Western business press. Some commentators have also pointed to the drop in China's BTC hash rate, a measure of the total. Has the hash rate in China has waned in recent months, so the China crackdown is for real and having a real impact. At the same time, Beijing, PBOC have beaten the Fed, the ECB, and the rest of the world in developing a digital currency of their own, the e-renminbi, which is reportedly planning to launch using the coercive power of the state to force adoption. Boom. Other issues in the crypto space have nothing to do with China. Yeah, you can't have launched a digital central bank currency with, US Tether, USDC flying about, can you? Let alone Bitcoin and the others. Other issues in the crypto space have nothing to do with China. For example, last week the DeFi token Titanium, I talked about that, dropped from $60 a coin to zero, a rare occurrence even in the volatile world of crypto. Yeah, so Bitcoin's not going to zero, obviously, but we're going to feel some further heat for a little while, seems like. Top silver traders. Yeah, this should be interesting. Top silver traders forecast mini super cycle. Before the plunging commodities late in the week. Yeah, it kind of seemed that the whole inflation trade got overcrowded. So this could be a little pause in that action, right? So after the Fed gets done meeting tomorrow, it'll probably back with the printing press full blast again, right? Top executives, some Cargill, Kofco, Vitera, and Scholar said this week at the FT Commodities Summit. So they're just pumping their own bags, isn't it? Ag commodities, okay. Oh, agricultural traders. I was assuming it was going to be AG Silver. No, it's not. Okay. Powell just launched 2 trillion heat-seeking missiles. How the Fed started the next repo crisis. Last week, amid the fire and brimstone surrounding the market shocked response to the Fed unexpected hawkish pivot, we noted that there were 2 tangible, if less noted, changes. The Fed adjusted 2 key administered rates, raising both the IOER and the RRP rates by 5 basis points, which is hardly anything, right? That's like 0.05 of a percentage point. 100 basis points equals 1%, right? Repo rate corridor. Not too sure what is going on here, but something moved. So, okay, that's that rate. IOER and RP stop out. What does all this mean? What does this mean? Yeah, question mark. Securities repo guru Scott Skim wrote last week, clearly the Fed intends to move overnight rates above zero and drain the RRP facility of cash. Why would they do that? Unfortunately, the end result will be precisely the opposite of what the Fed had wanted to achieve. But what does this really mean for overnight rates? Yeah, little bounce, do we? What kind of bounce? Effective Fed funds rate. So this is their target, I believe. 0.25. 0 to 0.25. Yeah, that's that range, right? So it went up. Wow, 60%, 66%. Okay. And this is that facility, RRP facility usage, just skyrocketing, right? Bottom line, both markets rates and RRP at 0.5%. There's really no economic incentive for cash investors to move cash to the repo market, or as we summarize, the Fed's rate change may have zero impact on the Fed's reverse repo facility, or the reckon $500 billion in cash part there. In retrospect, boy, that was an understatement, because just 1 day later, the already record usage of the Fed's reverse repo facility spiked by a record 50%, exploding to a staggering $756 billion. Wow. Oh, wow. The US dollar money market today, yeah, rates definitely soaring. Zoltan summarizes, it's either quantities or prices. Indeed, in 2019, the Fed chose prices over quantities, which backfired and led to the repo crisis, which ended the Fed's hiking cycle and started not QE. We're not doing QE. Print. While the Fed redeemed itself in February when it expanded the usage of the RRP facility without making it liability constrained, as it chose quantities over prices, which worked well. Last Wednesday, the Fed turned unlimited quantities into money for free and started to sterilize reserves. Yes, basically draining cash out of the system, right? Bottom line, we are witnessing the dealer of last resort learning the art of dealing, making unforced errors. If the Fed sterilizes with an overpriced overnight RRP facility, it has to be ready to add liquidity via the swap lines. Yeah, translation, here we go. By paying trillions in reserves, 5 basis points, the Fed just planted the seeds on the next liquidity crisis. Boom. There we go. And I'm going to take a little break and then take a look at the charts in about half an hour to an hour or so, or maybe a little bit later. But at some point today, I'll take a look at that, the actual chart action, and see how we're doing. Maybe around midday US time. So tune in for that.